Good morning. My hair is slightly whiter today. For anybody worried, we're taking it back 2005 because again, one of my favorite songs from the Somerset, "Take It Back 2005." But I think it's Chelsea is the name of the song. But what up? We're gonna look at 2005. So this is Trendspider. We're gonna get right into it because we got a lot. Mara. We've got NVDA earnings. We've got PANW, Palo Alto Networks earnings. I've got a great strategy to trade FFIE, which makes you 50% over the last few days. Again, great content. If you're new, subscribe, hit the alert button, whatever you want to do. But here's the cues. Where are we? We still have confirmation. If you don't know what confirmation is, you can go to my dailystockpick.substack.com. It's a free newsletter. You can go down to this education portion. It is paid. I give a free 7-day trial. So you can read the entire education center for free and then just cancel. I don't care if you cancel. If you value what I do, you're going to stick around because I always update this on the weekends with paid content. But the actual newsletter is 100% free. Like yesterday, I said here, Boyle, trade idea. You can do a trade idea. Today's trade idea, QQQ. And I do think that I've said it before. We're in a bull market. And I'm giving you the trade idea right up front. We're in a bull market. We have confirmation. We have crossed that 449 point. I think that becomes your new support level. 449. We're at 454. You can trade TQQQ based on this. Now, here's what I want to show you. In Trendspider, the weekly seasonality. We go back 19 years, almost 20 years. Okay? 62% change in the current week. 65%. I'm sorry. With a mean of 0.51. Not great. But you know what? If you invest in TQQQ, maybe that's a good one. Now, here's the next week. Next week, 74% positive. 74% positive. 3.44% at 22. Again, this is the seasonality. These are the benefits that you get with Trendspider. You not only get my 4-hour algorithm, which you can see here, it performs really well. You make 50% over the last 24 months with QQQ. Imagine what you can do with TQQ, which is a triple levered ETF. If you want Trendspider, there is a sale. It ends today. You will save up to 65%. You get 6 months for free, $46 a month for the standard. You can pick whichever one you want. Compare the plans. 25 alerts versus 75 alerts versus 300. I'm on this standard plan. It's perfectly fine for me. I don't use half of what Trendspider does. I've managed to gain a 7-8 figure portfolio. I don't know about now, but it is what it is. I've made a lot of money. I traditionally beat the S&P. This year I'm not beating the S&P because a large portion of my portfolio is in Apple, and Apple has been a laggard. Not of recent, but year to date it has been a laggard. Here's the QQQs, and you look at this, and it's just, seasonally, it looks like it's good. So you want to take a look at that. What are the biggest movers today? Well, we're going to go over this. We're not going to go over Larimar. We are going to go over PANW. PANW was down 9%, under $300. You could have bought it under $300. You may have another chance to buy it under $300. We'll go over that one. The actual earnings were good. It was billings. Chinese automaker Lee fell. We're not going to go over that one. One that I do want to go over is this. This is a strategy in Trendspider. If you have Trendspider, it's going to be in the newsletter. Just import it. It's an A+ setup. So you can import it. You can get your entry, Force Trendspider, into FFIE. Now, if we go here and we look at FFIE, okay, this has been the meme stock of the day. Look at the 4-hour algorithm. It had you in at 5 cents. Ooh, 5 cents. Look at that. It's up at $1.79. You could have gotten out at $3.90. That would have been even better, but we're at $1.79. In pre-market, it is down 17% at $1.49. Now, if you want a strategy and you want to just trade this one, this is the trade setup. So this is the actual strategy that you have. I would say the entry is more important than the exit on this strategy. It makes you, over the last 4 days, 48%. Buy and hold, you make 35%. So I beat buy and hold. I would say the entry is far more important than the exit. So you want to find those entries. Play with the exit. You customize the strategy however you want. I tested it over 4 days. Past performance doesn't indicate future performance, but this is a strategy to protect you from the downside. Yes, it's at $1.49. I would expect this one. Look at how the stock opens up typically on a day. So I would expect this one to pump during the open. So if it got you in $1.55 and you're not out as far as this pre-market goes, maybe it's a good one to actually use. Now, somebody asked me about Mara. We're going to go back to the 4-hour strategy on this one, because Mara, on the 4-hour strategy, if you were to employ the 4-hour strategy on Mara, and again, I'm just pointing this out, that this is what you get with Trendspider. You get everything that I use here in Trendspider, $40 a month. So here's Marathon, okay? Here is the results of the 4-hour algorithm over 24 months. That's 2 years, okay? 28 positions, so about once a month. What do you make? 310%. What if you bought Mara 24 months ago and you're just sitting in this and buying and holding? I particularly bought and held because I am holding it long term for at least a year, but I use the entry on this 4-hour to actually gain entry. It's 135% if you just bought and held. That's great over 2 years. That's fantastic return. But wouldn't you rather make 310% with the 4-hour algorithm? It is a fantastic ability here in Trendspider to be able to do that. And again, $46 a month. It is on for another 16 hours. Make sure you sign up today. You can even use this in the Qs. The Qs, like I said, it gives you the entry point here. The entry point on this one, $426. We're at $454. You can dollar cost your average way up and just dollar cost average with the entries. You don't have to worry about pulling out on this one. You know, again, it's not a, pregnancy scare. Don't worry about pulling out. That's what she said. Let's look at, some people asked me, and I read up about this. Duolingo, which was a Brad Freeman pick, and he really liked it. He was gung-ho on it. Super positive, blah, blah, blah. Really liked it. Wanted to get in on this one. Well, here's what you have. The problem that you have with this one, and I wanted to point this out, is OpenAI displayed, and Microsoft even displayed, and Apple will display in June, real-time translation and conversation from one language to another. Not just reading on a screen, but they will read it back to you exactly what, say you're in Italy and you're discussing your bill with a hotel clerk, okay? Or you go to the red light district in Amsterdam and you want to negotiate, but you don't know Danish. You don't know that language. And for some reason, they don't speak English. Well, you open up your OpenAI. You open up your Copilot. You open up your Siri probably in the next couple of months. And you open that up and you actually have a conversation. What does that do to somebody who's trying to learn a new language? Does this push the actual language training business to a zero? It looks like it. You went from $245 and you're putting in a floor at $177. Now the MACD is going to cross up, probably going to get you in here, probably going to get you in. But it got you out with a 1% gain. The 4-hour algorithm, yes, it gapped down like that. But that was earnings, the gap down on earnings. Then you had the OpenAI stuff, and it just killed this Duolingo. It killed it. Absolutely killed it. So that's the first that I want to point out, that you might have an opportunity in Duolingo. But I would stay away from that one just because I think, me personally, I'm not going to take the effort to learn a new language if I can have an actual conversation with somebody just through a computer that's going to translate it. I will probably inherently understand a language a little bit better just by that. And probably the AI, I could ask it to have a conversation with me, and it's going to train me on how to speak the language. So Duolingo, I'm not too impressed with it. Now, let's talk about Google. First one is Google. Now, they haven't had a huge announcement. They had their AI last week. I was supremely impressed. This is at 178. Do you want to get in? Absolutely. The 4-hour algorithm got you in at 136. This is a stock you just want to buy. Why? Well, let's go over Google, Meta, and Amazon. The ad spend for the next year. You've got the Olympics, which are probably going to be a fairly big social media platform. So you're going to have searches on how to watch this stuff. You're going to have increased search. That is good for Google. It's also good for Meta. So you probably want Meta. We'll go over Meta in a little bit, but look at the chart of Google. You are heading into the biggest ad spend of all, which is the election season. Okay, if you haven't gotten an election text asking you to donate money, the reason is because they want to run ads. Where are they going to run ads? They're going to run it on Google, they're going to run it on Meta, and they're going to run it on Amazon. Those are the three big players. So in my mind, again, you want to invest in those, and they are in the core portfolio. Do you want to invest in Meta? Meta is in the process, and I've said it before, it's in the process of covering this gap. It will be a $500 stock at some point in time. Their earnings are out here in July. I would not worry about the spend with Meta. That was the reason it got brought down. It wasn't the earnings. It was the spend. If he's spending that much money, then they're worried about the metaverse kind of spend that was $10 billion at the time. He is going to spend a lot of money. My estimation is he's going to be smart about his spend. But Google and Meta are the two platforms that can take AI and actually monetize it. Meta is probably going to be the biggest beneficiary because their AI is really that good. It's open source. The Llama stuff is really good. Now let's take a look at Amazon because, again, whether your grandmother is cooking chicken or meatloaf for Thanksgiving dinner, that's already priced into the market. You can't take that out of the market. Now, here you go. Amazon, what do you want to do? The algorithm got you out with a nice 1% gain. You know, again, we see these button hook tops. Don't know what a button hook is? Go to my newsletter. It's in the education section. But we see these button hooks, and you typically see the exit right after a button hook. And on the bottom side, if you see the button hook on the bottom, you see the entrance in the algorithm. The MACD down at the oscillator, the RSI down at 45. Not horrible, but I've said it before. This 188, until we hold for a significant amount of time over 188, that is your top. Do you want to buy here at 183? I'd say if you already have a position, there's no reason to enter right now. But I do think that Amazon specifically may have some big announcements over the summer that may push this thing up. You're seeing healthcare. Amazon entered into healthcare. You might see some AI stuff. You might see some big announcements on this. I don't see it. I have a core position in it. If you don't have a position in Amazon, understand that if you have a position in Amazon through an ETF, that's great. Don't start it here at 183. If you have no exposure to any ETF or any Amazon, I would just buy it. Honestly, I would just buy it. That would be my suggestion to you. Now, let's move on to Microsoft, because with Microsoft, they announced this is a fantastic video from the Wall Street Journal yesterday. If you have not watched it, go and watch this one. It will be linked in the newsletter. It is Satya Nadella, who is the CEO of Microsoft, with their new PCs that are optimized for AI. If you want to just read the article, here it is. It's the new Surface model launch of what's called Recall. Now, this morning, Elon Musk on Twitter tweeted out, this is the start of Black Mirror. He would never turn this on. I'm not so sure that the majority of people won't turn this on. It is memory that is stored locally, that is not uploaded to the cloud. It is local on your computer, and you can opt out of it. But it's really, really interesting. I really liked it. Now, here's the thing. We talk about this a lot. What are the chips that are in here? They're Qualcomm and they're AMD. Qualcomm is the only one of those that is in the core portfolio. AMD is not. I do own AMD. Qualcomm, 195. The algorithm makes you 31%. Again, this is a chip company that is on the move, that has partnered. Apple even uses Qualcomm. They can't figure out their mobile chips, so they use Qualcomm. Have they been successful in developing their own chips for the Macs? Yes. Have they been successful in creating their 5G chips? No. They've extended with Qualcomm. Qualcomm is a major chip player. It's amazing. Volkswagen has them as their self-driving chip. Now, do you want to buy this? At 162, fantastic buy right before earnings. At 197, I don't think so. Now, you've got this line right here. If we go and we look at this, this is the all-time high. So that all-time high at 193, you're at 195 right now in pre-market. Until you hold that 193, this is resistance. Old resistance turns into support, but you have to hold above it for a certain amount of time. Do you want to buy it? No. Again, the whole point of this podcast is educating you. You should be able to find these things. But this is the old-time high. If you just look at this and you look at the upside, old all-time highs always turn into resistance. And until you break that resistance, it will be resistance. It will turn into support someday, but it will be resistance. Now, let's talk about, here's one announcement that they are taking Apple laptops on. Oh, yeah. They're taking Apple laptops on. I do want to talk about, if you didn't see it, Microsoft in that video, he kind of calls out Apple. He says Apple has been winning on the laptop because Microsoft laptops, A, battery life, B, the fans come on. Well, on the new Surface laptops, they're pretty optimized. They're like Apple laptops. So I'd be a little bit concerned. They are priced similarly to Apple laptops without the software that comes with Apple. So I'd still say Apple is the better buy. Ironically, it's going to be the economical buy versus the Microsoft stuff, which you have to buy extra services for. Now, let's talk about JP Morgan. I was going to do HIMSS. Let's do HIMSS first. HIMSS and HER surges on cheap compound versions of Novo Nordisk. If you remember, the HIMSS CEO came out and he made some comment about the Palestine stuff with the students kind of protesting, and it was kind of viewed as anti-Israel. And that was where you started to see this dip. And you started to see that dip right around here. Well, it came down around 1236 or so. I said any reaction in this is an overreaction. It was the CEO. He came out and he clarified around earnings, and their earnings were good, and it popped, and it just went forward, but it kept getting confirmation. Now, if you got into this at 1245, because I said any reaction was an overreaction, boom. You're at 1869 right now. Let's see what you are in the pre-market. 1888. It's continuing its rise. I would argue. Now here's what they announced yesterday. They will allow, they just got approval to offer customers a compounded version of Novo Nordisk semaglutide. Now, we've said it before. It's an AI and a GLP-1 market. Here's what you have to understand about this. This is not Novo Nordisk semaglutide. This is not GLP, Ozempic. This is not any of that. It's not Wegovy. It's a compound version. So they got the approval to do this. They will do it starting at $199 a month. It also offering a $79 a month plan for an oral version of the semaglutide. It is a compounded version, so it hasn't gone through FDA approval. So the question of its effectiveness is out there. But they are going to benefit from this. Now, what I do want you to look at, though, is HIMSS valuation. The valuation is nuts. It is a hold in the quant from Seeking Alpha. From Seeking Alpha analysts, it's a buy. They are not making money. When you look at this valuation, it is crazy. The PE from a forward standpoint is 300% above the sector median. They just don't make enough money, and I don't think that they're going to catch up to this valuation. So if you've made your money on this and you got this, trade it with the algorithm. I would say, ride it as long as you can, but trade it with the algorithm. Trade it with some type of system that works, because I would argue that this is probably a $10 stock. It's got some hype, and I think it's been a great trade. I really do. But be careful with this one as it runs. I just don't think that the valuation supports the price. Now let's talk about valuation. JP Morgan, which crashed yesterday. It crashed down 4% yesterday. I have said this, that I am not in JP Morgan because I don't like the way Jamie Dimon probably lied through his teeth about the Jeffrey Epstein situation. But this is the best in breed bank. And they hit 200 and then they bounced off it. These were all-time highs at 204, 205. Okay? He said yesterday, his quote, you can Google it, that he is not buying back the stock. He mentioned 2 times book value. He reiterated that he will not buy it back at 2 times, that 2.3 times tangible book value, which is a mistake. Well, that kind of points out, let's look at some book value of bank stocks, okay? If you go over here to FinViz, book value of, book value of Citigroup, it's trading at 63. Book value is 99. Let's look at Bank of America. Book value, 33. It's trading at 38. Let's look at the book value of JP Morgan. JP Morgan's book value is 106. It's trading at $200. So let's go to Wells Fargo. If we look at Wells Fargo, which is another one that I own, that book value 46. It's trading at 60. Where's the best value in banking? I pointed out Citigroup. The book value is 99. It's trading at 63. Yes, you could have gotten it in November down at 40, but it's trading at 63. Year to date, it's up 22%. It has run. If we go and we take a look at this in the algorithm and we say, okay, where are we in the run? Because it is in a run. It is in a run. We're seeing the MACDs crossing down, or is that quickly coming down from 70 level, 69, down to a 51, quickly coming down. You're seeing that button hook, but we are in a run. It said buy it at 60. Do you care that it's at 63 right now? Not when the book value is 99. So I would argue Citibank is a great, great buy. Just, putting it out there. This was incredible. 13 years ago. What was I in my 40s? Had I bought Bitcoin, $5,000? This is part of a YOLO strategy, okay? It doesn't mean that you go all in. If you have $5,000 and that's all you have, do not YOLO into something, but take $1,000, put it into Bitcoin, put it into NVDA, put it into Tesla. Find a place that you think is going to grow and put a small amount of your money there. It could turn into life-changing money in just 13 years. 13 years, I had my money in Apple. It's $5,000 turning into $80,000. That's amazing. But boy, do I wish I put $5,000 into Bitcoin 13 years ago. Boy, I wish I put $5,000 into NVIDIA 13 years ago. Boy, I had wished Tesla. Supermicro, I just got into last year. It's still worth a ton of money, but it's not worth what this stuff is. Again, this points out you do want to go with some type of YOLO strategy with 5% of your net value, your net worth. If your net worth is say $50,000, then 5% is what, $2,500? $2,500 should go into some type of YOLO strategy, because here's the thing. If you lose 5% of your actual net worth, yes, it hurts. Yes, you're going to see that on paper. But in reality, your life isn't going to change. It's not going to change. But on the upside, again, this points out in 13 years, that could be life-changing money. So as it starts getting higher and it starts running, I would argue you probably want to start trimming. So you don't want to keep the $5,000 in there, even though Bitcoin went to that. Dell teamed up with NVIDIA to offer new Blackwell chips. This was part of the announcements yesterday. This is Dell, Microsoft. This is Intel, AMD. This is part of the AI trade. Now, I argued yesterday, and I don't know if it was on the podcast or YouTube Live, but Dell, I think, is a better buy right now than SMCI. I think both will do really well. I hold both in my portfolio. Where you're seeing Dell, you're seeing it cross down a little bit on the MACD. The RSI is coming off super oversold levels at 82. It's coming down to 66. You've got this gap up from earnings, started to cover it, just covered it halfway, bought more at 113. I bought more at 120. It hurt when it came back down to 120, but the algorithm said, hey, get back in. So I bought. Did I get out here at 4%? No. I'm holding this long term. The algorithm makes you 235% over 2 years. Okay? 2 years, 21 positions, not even once per month. The buying and holding makes you 282%. I'm using the algorithm to try and find spaces to get in. Am I getting in right now? No. And it's not because it's overvalued. It's not because, it's a crazy, valuation. I am looking at this as far as the valuation goes, and I'm saying, the peg, which is, again, Steve Kress's thing, the forward peg is 1.69. That's 16% below what the sector median is. Now, Wall Street says it's a buy. Seeking Alpha analysts say it's a buy. Here's the editor's pick. DELL AI competitiveness. This is from April 30th. Boy, if you had bought in on April 30th, you're doing really well. Average price target 136. You're trading at 145. You are at 52-week. No, you're not. 52-week high is 154. So am I buying this one now? No, your top is 154 right now. So it's not worth to put money in. But you want to keep this on your watch list. You want to keep that on your watch. DELL is one that I would absolutely put on your watch list. Now let's talk about the earnings. Palo Alto Networks tumbles following billings guidance. This is the billings guidance. So here's what you have to know about the billings guidance. The billings guidance came in $5 million lower than expected. That indicated to the market that the billings were slowing down. So revenues were up. Earnings were up. Everything was good. Let's go to Earnings Hub. I'm going to pull up Earnings Hub so we can see. Do I have to sign in on Earnings Hub? Let me see. But Earnings Hub, no. We're going to pull up DELL, PANW. PANW right here, Earnings Hub, expected 125, reported 132. Expected on revenue 1.97, reported 1.99. Those are really, really good numbers. The call is here. If you want to listen to it, you can listen to it on 1x, 2x speed. The AI summary, strong Q3 with top line growth, 47% growth in the thing. The CEO went on Jim Cramer last night and he said, hey, here's the reality. Billings is an outdated metric. I believe it. He said, Cramer actually pointed out a great thing. And this is a great thing. So when United Healthcare had the biggest ever cybersecurity attack, who did they call? It was PANW. And for Cramer to point that out, I thought it was actually pretty good. Now, I will say, you want to buy this under 300. It did dip in under 300 in the pre-market and post-market yesterday. It dipped to about $290. You want to buy this under 300. You still have a positive moving 50-day. You have a flattening 200-day. But I would say if you want to bet on earnings in the cybersecurity business, I would say buy CrowdStrike. What happened last time with CrowdStrike was enormous. Now, you haven't reached this level. Remember, after earnings, they popped to 365. I believe it was around 380 in pre-market at that point in time. But ever since then, it's come back. Did you want to buy this at 300? Yes, you wanted to buy this at 300. Do you want to buy this now at 348? I don't know. I mean, their earnings are coming up June 4th. You've got a lot that can happen between now and June 4th. The MACD, super high. RSI at 77. In pre-market, you are, down 1%. I would argue that this is your range between 342 and 301. So it's a risk to buy it. But with their billings down, did people switch to CrowdStrike? I don't know. I mean, that's an interesting one. You can read about this right here. In my mind, I'm holding this one. I'm not getting rid of this one. Now, somebody asked me the other day, and I wanted to point this out. Zim Integrated Services reward shareholders with a 23-cent dividend. This is a 1% dividend. You're down 10%. It was a horrible quarter. This is shipping. I just don't think that this is a good stock. I'll leave it at that. 1% dividend. The reason they got a run up last time is they had pricing power. Plus, they were giving you back as shareholders a tremendous amount of special dividends. Like we're talking 9-10% dividends. So I would stay away from that one. we had a couple of quotes from Dan Niles and Gene Munster on NVIDIA, and I wanted to read these because they're very important. Now, what Dan Niles does is he compares the AI landscape to the building of the internet, and he does it masterfully in these 7 situations. 7 situations. In summary, this is the summary. I believe the AI infrastructure build out could be as powerful for NVIDIA as it was during the internet infrastructure build out for Cisco, when revenues increased 16 times over 5 years and the stock rose 4,000%. But be prepared for larger bumps and bruises along the way. I expect to see multiple 25 to 35% drawdowns over the next 3 to 4 years, while NVIDIA's stock ultimately goes from 3 to 4 times from current levels, along with revenues. That's what he's talking about, what I've said. Just buy it. Just buy it. You will have huge drawdowns, but the time to buy is when you get an entry or find a situation that you like. Find a strategy that you like. I use the algorithm. 838, still a good buy. 896, still a good buy. Got you out with a 71% gain here. You make 451%. If you want to trade it in a retirement account, go and trade it on something that works. Because if you're gonna lose sleep over a 40% drawdown on this, you don't want to do that. You want to buy and hold, as far as I'm concerned. But NVIDIA, that's the first quote that I would point out. The second quote I would point out, and I would say any dip is a buying opportunity. This is from Gene Munster. Fundamental pressure point. NVIDIA will release a new flagship GPU, Blackwell. What he's talking about is companies that are canceling their current chip orders and waiting for Blackwell. NVIDIA has a strategy in place to try and combat that. It's a good strategy. My sense is it will result comparable year 25 will be comfortably exceed 30%. In other words, the AI build is just starting. NVIDIA will grow for longer. Again, these guys have a huge price target on it. It's down 1.25%. It was up a lot yesterday. It's just getting some pressure. Again, NVIDIA, for my mind, I think that 744 is an ultimate support point. You can see it right there where it bounced right off it. I think that's an ultimate support point. I think a secondary point might be 815 to 850. But again, if you want to get in this before earnings, the options market I saw was implying a 9% move up or down. 9%, if 10% up isn't worth it to you, then don't get it. If you want to buy it 9% cheaper and you think they're going to announce some type of huge cancellation, don't do it. Again, Blackwell is coming out later this year. I think they delivered the first one to OpenAI, but it's coming out. Official release is later this year, and this will be a good time to enter NVIDIA for a 2 to 5 year time frame. That's just my opinion. Just my opinion. And we can go over here to Earnings Hub. We have Target tomorrow morning. We have PDD tomorrow morning. Macy's reported this morning. It was an okay quarter. NVIDIA, we can look at NVIDIA here. The expectation, $5.18. Again, they reported $5.16 last time. That was an 11% beat. So expectations are high. The market will live and die by NVIDIA tomorrow. If you see them miss, you could see a 4 or 5% drawdown just on the Qs. Just on the Qs, because people will start to sell because we're at all-time highs. But I'm not pulling out of the market. What is it Matt Damon said? Fortune favors the brave. Yeah. So take a look at those things. This is also a great look at how NVIDIA, SMCI, DELL, Arista Networks, Marvell, Supermicro, how all of them integrate together. I'll put that link in the newsletter as well. Here is, this was interesting. So the SEC asked Exchange to update 19B4 filings. This is part of Ethernet's ETF strategy. Full 180. Ether surges on report of SEC's sudden progress on spot ETF filings. I don't follow this. ETH is up 22%. You can see ETH right here in Seeking Alpha. If you want Seeking Alpha, you can get it. I give you 20% off. But here's Seeking Alpha. You can track all the crypto that you want. It's up 22% yesterday. You can look at the 1 month It's up, let's see, 19% in 1 month. 5 days, you're up 25%. I think this is very much a buy the news, sell the actual event. I think it's just like Bitcoin. So buy the news, but sell the event. I think you can make money on there. I think that's a good trade. Social request, Shep bought DELL at 119 a few months ago, sold last week after the 52-week high was breached. I'll get back in afterwards. I think that's not a bad, again, if you want to trade at a 52-week high and get out of your position or even trim the position, that's a really good strategy. When you get to a 52-week high, that is typically a resistance point. So when you get to that and you want to get back in, he sold at a 52-week high, which was, it looks like 154 or, maybe 150. Not a bad play, Shep. Again, if you buy at 119 and you sell at 150, that's lower left, upper right. That's the way you want to buy and sell. So, Whiskey Tango from Spotify asked me, let's see, I may have missed it in an episode, but have your opinions on GCT changed? I responded to this on Facebook maybe last week. It was way down yesterday. We were down 8-9%. You're in that downturn. Algorithm got you out with a 7% loss here at 38. Now, I bought for the long term. And the reason I bought for the long term is because it's an alpha pick. If you want to get in on alpha picks, look at their portfolio performance. 122%. We're coming up on 2 years now? 122% on a portfolio of 2 years. That's fantastic because the S&P great at 35%. So my thesis on GCT has not changed. If you go over here, we pick a GCT and you go and look at in the quant, it's still a strong buy. Now there are several analysis here by Steve Kress and others that say, hey, it's still a strong buy. This is the e-commerce giant. Now, the valuation is a B. You might say, well, why is it coming down? Well, take a look. We'll just do this chart. Over 1 year, you're up 497%. Okay, if we look at Wall Street, Wall Street's price target is 44. But there's only two analysts that actually cover this. If we look at the revisions, the two analysts both have revisions up in the last 90 days. So if you just look at, let's go to ratings and we will go to Wall Street. If you look at where it tracks the price target, they just started covering this in 2022. And it just kind of, goes along the price target. But again, it's two ones. Seeking Alpha analysts have it as a buy. They have it as a strong buy lately, but it's been a buy ever since, 9? So has my thesis on this changed? No. I follow alpha picks and I follow it for the long term. These are basically 2 stock picks every month that come out with a long-term buy and hold strategy. And again, that portfolio is up 122% versus 35% with the S&P. You get access for over 20 stocks on day one. You get the full analysis. So if we go over here to Alpha Picks, what do you get? You get this full analysis of every stock. If you don't understand fundamental analysis, this is a fantastic way to look at it. Now, if you want to, you're saying, well, that's great over the past. How do I get started? Well, you pick 5 strong buys. And if we go over here to my newsletter and we go to dailystockpick.substack.com and you go to the paid newsletter, creating my Alpha Picks portfolio. That's just 10 days ago? I created that. I think I'm up, the portfolio's up like 3-4%, which isn't bad. I picked 5 of them. One of them was GCT, just to tell you, and it's down 14%. Yet the entire 5 stocks are up. So it's about building a portfolio, not going all in. Has my thesis changed? No. I think it just was. When I bought at 40, I kind of knew, hey, if the earnings just come out okay, and they just came out okay, it wasn't like a complete blowout. They just came out okay. I understood it might go down, but I am in this for the long term. It is in my brokerage account. I don't want to trade this one because I want to get to long-term capital gains. So did my thesis change? No. Does yours? Maybe. You know, again, you shouldn't follow me into this stuff. You shouldn't follow alpha picks into this stuff. When they do a buy, they do it small. You can look at the actual portfolio percentage of what they hold. And as they get to, like Supermicro, great call. In November 2022, I think, is when Steve Kress got into that one. He got into that one, Supermicro. He's way up on it. But several times he's trimmed it. And Alpha Picks has let you know that he trimmed it. So that's essentially what it is. But again, if you want to look at it, you can sign up for the newsletter. And again, if you want a free 7-day trial, just look at the 5 picks. Pick out which ones you like. And then just go back and, unsubscribe. But here's my algorithm. My algorithm in GCT works over 2 years, 21 months. Okay, 16 positions. So not even once per month. You win 44% of the time. Your average win, 44%. So if you want to follow my algorithm, you don't even want to follow, the alpha picks. You want to follow my algorithm? It makes you 254% over 21 months. What do you get if you just bought and held? 70%. So you're doing much better over 21 months if you use my algorithm to get in and out. It's all about finding the perspective. Did I get out here? No. My actual strategy may be different from yours. Let's talk about scans. These are stocks that are bullish in the 4-hour algorithm. Disney is the first one. It is still a core portfolio name. Now you had this nice huge gap down as far as the algorithm goes. The earnings. The earnings weren't great. This was the earnings where it gapped up because you had Bob Iger fighting Nelson Peltz, and he threw the kitchen sink, everything at the earnings. Well, now it's back to reality, and now you've got to put up or shut up. And so you saw this pop up to 122, and it's come back. Long term, this is a $140 stock. So you want this 153, huge resistance level. You'll see this pop up to this 200-day at 126. If you want to buy here at 102, you may be able to get it under 100. Right now on the 4-hour, I would be a little bit hesitant about this buy. And the reason is because you don't have confirmation. Above that 9-day is confirmation. But your RSI incredibly oversold at 29. People have just been ditching that stock. Shopify. This is one that I've told you I believe is an $80 stock. This one, cross up here. Has it finally hit? And are we going to fill this gap after earnings? This one, a little closer to confirmation. You got a nice MACD cross up. RSI, completely oversold at 33. It's coming off of levels at 24. 24. So do we start to see that one? I like this one. I think it's an $80 stock. I am negative on my position in this. I do think that this gap gets filled up here. If you want to look at the weekly chart of this one shows you that 200-day is providing tremendous resistance here at 80. That's why I've picked 80 as the stock. It will get back up there. So if you want to buy and hold this one, I don't have a problem buying and holding. An energy stock that gave us a good cross up here is Devon. Now, I've said Devon, I think it's a $40 stock. This is at $49.97. I've said it before long ago that this was a $50 stock and you should buy it under 50 and sell it over 50, but I had moved that to 40. This recent run from February to April took it all the way up to 56, 55, 55.09. So it took it all the way up there. Since then, it's just been upper left to bottom right. So do you want to buy here at 49? I don't think so. You've got your catalyst gone. If you don't have energy exposure, maybe it's a good one, but I don't think it's the best. Now, we did get a cross up in a sector. One of the sectors for spider sectors. If you don't know spider sectors, you can go over to Seeking Alpha here, and you can go to market data, and you can take a look at these. Let's see, key market data. If you go here, U.S. equity sectors right here. Look at this. You can see these. XLB up 0.14 yesterday, up 3.73. 1 month up 7.88%. It's not one of the leaders over year to date. Over 1 year, it's kind of middle of the pack. It's doing really well. But what I want to point out to you in an XLB is the algorithm performance. Over 24 months, it gives you 24 positions, so once per month. Okay, your average win 5.99%, but you win 46% of the time. That gets you 50% over 2 years in a sector that is amazing. Now you're coming up on 52-week and all-time highs here, so it's a little bit of a might get a resistance up here at about 93 or 94. Do you want to buy here? It just got another cross up. So here on the MACD, it's crossing up. The RSI is at 65. Maybe not a great one, but I would keep an eye on this one because materials, hot sector, and the algorithm works on that one. Yeah, what do you get if you just bought and held from 24 months ago? 14%. So why not trade that one? As far as it outperforming, if you have this in a retirement account, trade it. Trade it. Now there's other ones that have come up, leveraged ETFs. One that is interesting, but it has been semi-broken, is UVIXI. The VIX, if you go over to Seeking Alpha and you just type in VIX, and you just look at the S&P VIX. Now, what I want to show you is how unvolatile this market has actually been. Year to date, it's down 0.8. This is the VIX. This isn't UVIXI. This is the VIX. This is the VIX that tracks options. Now, if we go over 5 years, you're down 16%. But look, since 2020, when we entered into COVID and this peaked up to 75, you're down at 12. So UVIXI tracks it. It's a ProShares Trust Ultra VIX, so it's triple levered, but this is a decaying asset, so you want to trade it carefully. This one got a cross up at 25.34. Interesting. RSI's down. Trade it. What you might want to do is maybe even trade this on that 5-minute A+ setup that I gave you for FFIE. If you want to trade this one, over the last 4 days, you make 1% versus a 1% loss. It has you out right now, but it should get you back in at some point in time. If you want to trade that one. Again, Trendspider allows you to trade these strategies on anything that you want. But that one was an interesting one. Now, let's go over, because I want to show you, if you support this podcast and you listen, just use this link tree. Because if you want Trendspider, you go over here. You get Trendspider. And how much is Trendspider? It's on sale for the next 15 hours for $46 a month. $46 a month. If you're not making that using the algorithm, you're just not trading enough. Now, if you want Seeking Alpha Premium, which is the quant, which is all of that stuff, you get this 20% off your premium membership. Click on that link. Now, the third link is Alpha Picks. They save you $50. Save you 10% off of that. So that's now, say you don't want Trendspider, say you don't want Seeking Alpha, say you don't want this, but you use your phone. Well, join Webull. Get 75 free stocks. Get 3, 20, or 75, depending on how much you deposit. But use the link. Again, support the podcast. Say that you want home internet. I use AT&T Fiber here at my house. I have 1 gig service. It's a fantastic deal. $60, $70 a month. I don't know what I pay, but I use this. It is a fantastic, fantastic service. Refer a friend. I get you in there. I get you a discount. So say you have mobile phone service and you're paying too much. If you're paying anything more than $25 a month, use the link on Linktree. Get $20 off your first month. $20. What's the first month? It's $25 or $45. Say you have an Apple Watch and you're paying Verizon $25 or $10, or you're paying T-Mobile $10 a month. Visible at $45. It includes your smartwatch. It includes unlimited use of your phone as a Wi-Fi connection. It includes international global pass 1 day per month. Me, I don't have an Apple Watch that uses the service. I don't necessarily need a mobile hotspot unless I'm actually working. This mobile hotspot right here for $25 a month. This is the service that I have for $25 a month. So again, support the podcast. Use this link tree as you would like. All of the social networks are up there. If I've helped you out and you just want to give me a tip, then tip me. My suggestion is join the paid newsletter. That's as good as a tip to me, because that actually gives you something and it gives me something. So if you have any questions, I will be back tomorrow. If you have any questions, I will be here. So I'm available. Okay, take care. Bye.
the trading bell, my heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears.